The captain decides. The captain, he always calls you the captain.
Derek. You're working on my hat?
Yeah. You want your captain hat, right?
Yeah.
All right. I'll get it.
Thank you.
All right, guys. It's about that time. Get it, Si. All right, your snapping coming along really good there, brother. All right, guys, let me check and make sure we can see what's going on here in the group. Are y'all ready? I need to know.
Yes, ma'am. Yes, ma'am. Ready.
Okay, we'll give it a couple more seconds.
Again.
Okay, guys, just so you know, this training is just for our community, okay? Our community, meaning if you are part of the MBA, the Massive Bank Account Group, and or a part of the Dream Team, okay? This is just for us. Guys, you got to learn exclusivity. You got to learn how to just get what you got to get first, okay? This is the power of masterminds, all right? So if for any reason you are sharing this, please stop sharing it, because I am here sharing with you guys because you have made the commitment to work with our group, okay? We're going to teach it to everybody. We want everybody to win, but I got to make sure you guys win first, okay? That's what we got to do. We got to stick together, family first. We put the oxygen mask on ourselves, then we can help everybody else, okay? So if you're in the MBA group, it's amazing, wonderful. If you are sharing it, please stop sharing it. The captain decides. So the captain, he always calls you the captain. Okay. All right, ladies and gents.
Right, put my energy beads back on.
That's right. Get your mala, get your mala.
Yeah.
All right. Ladies and gentlemen, I think that we are good to go now. All right. So I want to.
Trace.
Yeah.
Trace, before you get started, two things. Are you going to record?
This is live in the MBA group, so it is being recorded in there.
All right. Awesome. Can you? Okay. Thanks.
Okay, guys, what I'm going to ask, well, I'm going to mute everybody here. Okay, myself. You can unmute yourselves for any reason down the road. And Monia, I'm going to make you co-host just in case. as I'm training. Okay, because I can't see everything, guys. All right, as we're doing this. So I want to welcome you guys to this afternoon's training on what we're doing. And I wanted to pull this together because I want us to collectively, I want us to move in sync. Okay. Although trading in itself does not change, right, the fundamentals and the core concepts and different things that's going on versus related to price action, although those things don't change that much, hardly if at all, what can change is the way that you see things. Okay. And as my eye gets more and more keen to certain things, and I pull in concepts that, you know, I learn in the IML community and things of that sort, it's not that things are changing. It's that what's changing is the way that I see them, right? And as with anything, if you have someone that you're learning from, if you can start to think the way they think and see the way they see, that's going to be much more impactful in your life than just trying to mimic what they do, because you cannot mimic what someone does until you can truly, truly understand why they're thinking the way they're thinking, or you're thinking the way they're thinking, or you're seeing things the way that they see things. From that, then you're able to actually start mimicking or replicating them. I won't say duplicating them because nobody can be duplicated, but you can start replicating them. Hold on, Josiah, what, did we have a discussion about this? Sorry, guys, it's Saturday. Okay, so I'm not just here, just, you know, that type of mode where I got to handle this too. Please settle that down. So you want to be able to replicate, but you want to replicate mindset. You want to replicate what they see. And then as you start to train your eye to see, then you'll be able to imitate what they're doing just the same. Okay. So that's really, really, really important in everything here. Now, one thing that I want to play for you guys before we even get started with this is, you know, those of you that may have come to the Go Beyond event, we had a segment that was played, right? We had a segment that was played in reference to Tony Robbins, right? And I have that playing here in one of my playlists here inside of YouTube. So what I'm going to do is I'm going to play this for you. I put it inside the MBA group and I shared it inside of our Dream Team information as well. But what I really want is for everyone here to listen to this, okay? And I want you to go and you can get the link from the MBA group and that sort. But what I want is for you to listen. And I've been teaching it to Josiah. I suggest you repeat. We're going to follow along with it before we get started, because I need your heart, your mind, your energy. I need everything to be in alignment first. Okay, it has to be in alignment first. So we're going to listen to this, and then we'll get everything started. So pay attention, check this out, and we're going to repeat what Tony Robbins says. Okay.
So many of you have heard the term affirmations, where you say something over and over again.
Can you guys hear?
Affirmations by themselves sometimes just lead to delusion. If you go, I'm happy, I'm happy, I'm happy, I'm happy, I'm happy, I'm happy, your brain goes, bullshit, you're not happy. Because you're saying it verbally, but you're not embodying it with your whole body. What I want you to do is to try something. I want you to feel strong, feel your body. Repeat this phrase after me. Now I am the voice.
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 I will lead, not follow.
I will lead, not follow.
I will believe, not doubt.
I will believe, not doubt.
I will create, not destroy.
I will create, not destroy.
I am a force for good.
I am a force for good.
I am a leader.
I am a leader.
Defy the odds.
Defy the odds.
Set a new standard.
Set a new standard.
Step up.
Step up.
Step up.
Step up.
Step up.
Step up.
Use your whole body. Now I am the voice.
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 I will lead, not follow.
I will lead, not follow.
I will believe, not doubt.
I will believe, not doubt.
I will create, not destroy.
I will create, not destroy.
I am a force for good.
I am a force for good.
I am a leader.
I am a leader.
Defy the odds.
Defy the odds.
Set a new standard.
Set a new standard.
Step up.
Step up.
Step up.
Step up.
Step up.
Step up.
Think about what it means when you say, now I am the voice. Your real voice is never the voice of fear. Your real voice is never the voice of worry. Your real voice has strength and certainty within it. It knows the truth of who you are and what you're made for. Breathe like you breathe when you feel strong. And when you say, now I am the voice, that means you're no longer the voice of fear. It's no longer the voice of your past. It's who you are made to be. When you say, I will lead, not follow, that doesn't mean other people have to follow you. It just means you live life on your standards and that you'll never settle for less than you are made to be or do or create in your life. That you will not settle. How does it feel when you step up and you claim who you are? Make a sound of how that feels in your body, ladies and gentlemen.
Woo!
How does it feel to create, not destroy, to create love, to create joy, to know in your life you're a giver, not a taker, to know your life matters? How does it feel when you know you're here to lead? What does it feel like when you look at your fear, or you look at your laziness, or you look at your past, and instead of dealing with it, you defy it? How does it feel when you stand in defiance of anything that would stop you? How strong do you feel when you say, give me your best shot, and you push through it? How does it feel? What kind of pride do you have inside when you just step up and claim your true identity, when you raise that standard? Think about what that means. Here we go, nice and loud. Now I am the voice.
Now I am the voice. Unmute, guys.
Now I am the voice.
Now I am the voice.
I will lead, not follow.
I will lead, not follow.
I will believe, not doubt.
I will believe, not doubt.
I will create, not destroy.
I will create, not destroy.
I am a force for good.
I am a force for good.
I am a leader.
I am a leader.
Defy the odds.
Defy the odds.
Set a new standard.
Set a new standard.
Step up.
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 Right, guys?
Yes.
Right. So I just wanted to start this off this morning or this afternoon with that, okay? Because unless you believe that about yourself, there's no strategy that's going to work, okay? There's no amount of trainings you're going to attend that's going to make it click. It will click when you tell yourself you believe that it should click, okay? That's when it will click. That's when it will make sense. That's when your eyes will start seeing it. It was like I once was blind, but now I see, right? See what? You see who you really are. And when you understand who you really are, then now you can tap into that infinite power, that infinite wisdom. You can tap into the Most High where all things are possible. And you can now not just say, I can do anything. You can now demonstrate that you can do anything. All right. And I believe that with what we have here, that all of us could defy the odds, right? We can defy the odds. There's no reason why you cannot defy the odds. There's no reason why you cannot set a new standard. There's no reason why you shouldn't step up. There's no reason why you shouldn't be leading and not following. And again, not following necessarily other people or other people following you, but putting in place what your expectations are. And as Jim Rohn says, you give yourself a command and you got to follow through. Give yourself a command and follow through. Thus, the commands that Tony Robbins is having us to give ourselves are ones that are beneficial to us. Okay. So is everybody in alignment right now? Are we good to go? Are we good to go? Can we get into this trading today?
Yes.
Okay.
Yes. Absolutely. Let's get it.
Absolutely.
All right. So here's what we're going to do. Let me see if this will work. If I can just share this screen here for a second. And if it will still show up over here. Okay, let's see. There we go. So this still works. All right, I'm checking the group to make sure it's there as well. Okay. All right, so guys, as you can see, I have minimized the screen. I cannot see you. And so Ramonia, or guys, please type in the chat, things of that sort. And then Ramonia, from time to time, if we need to stop and get some questions answered, or we need to give some feedback or some insight, I'll be happy to do that, okay? So the very first thing that I want to do is I want to make sure that you guys understand that what we're doing is we are leveraging the harmonic scanner, okay? We are leveraging the harmonic scanner. Why are we leveraging the harmonic scanner? Because the harmonic scanner really allows us to be able to identify trades where a potential move is getting ready to take place. Do you have to use the harmonic scanner? No, you do not. But if you want a simplified way to just, identify what trades you can potentially take and make some money from, then why not let the harmonic scanner be your assistant, right? Just let it assist you, okay? Let it assist you and tell you, what is looking good, what has potential opportunity. So that's why we use it, because it's a simple way for you to identify trades, all of us, okay? Now the harmonic scanner, I won't go into a bunch of detail about it, but most of you guys should know that over here on the right-hand side, you've got your entry points, you've got a stop loss point, and you've got 3 take profit points. If you have a D point that's down at the bottom, that means we're going to be looking to buy up. And if you have a D point that's at the top, we're going to be looking to sell down. Down here at the bottom, you can have many different indicators. For the sake of what we're doing, we're going to be using an RSI. We're going to be looking at stochastic as well. And then up here at the top, you can see the broker, okay? You can see the pair, you can see the time frame, you can see the type of harmonic pattern that it is. In this case, this is the shark pattern, okay? Now it's kind of funky looking because this D is down here and the price is up here. So I have no idea. Now the market is closed, okay, at the time of this. Josiah, please stop. Please stop. Okay, the market is closed. And so, we're not going to see any movement in the candles, which is actually pretty good because it'll give us an opportunity for me to kind of back test and show you guys some things, and hopefully bring some light to what's going on and how, we're optimizing and we're refining the optimal entry process. Okay. So for some reason, the scanner is not necessarily taking or saving my settings. So I'm going to have to come in here and make some of these changes. Josiah, you have got to, hold on guys. Josiah, please turn this down and do not make that noise. Do you understand? Come on, Pumpkin. All right. You guys listen on Facebook, please, just bear with me. Okay. So here we go. We're going to put 3 indicators on here. Now, this is just for now, okay? I'm going to share with you how things overlap, but I just kind of want to set things up so that you can at least see totally you can see all the different variations of the word. Okay, I'm kind of smart, but some things escape me at times. So anyway, what we're going to do is we're going to add a couple of indicators. We've got an RSI 14 on here. We're going to leave that there. That's fine. Okay, that RSI 14, what we're going to do is we are going to make the settings 80 and 30. Okay. And I like to just kind of make it shaded a little bit. That's just me. You can do things the way you want to do them. Up to you. Okay. All right. So that's the RSI. Right. We're going to add a stochastic. The regular stochastic. Just the regular stochastic. Right. I'm going to make the settings as well. 80 and 30. Okay. That one's already shaded. Okay. And then I'm going to add another RSI on here. Okay. Now, before I add this second RSI, guys, this is really what you need for optimal entry. Okay. Your OE strategy. This is what you're looking for in the OE strategy using these indicators here. Okay. I am going to add a second RSI. Okay. I'm going to add a second RSI. And I'm going to put it up here at the top. You can use this little thing right here, which is like the little arrows. Whoops. And you can change the position of it. Oops. All right, so I'm putting it at the top because I like to see this one at the top. I'm going to change these settings on this RSI. I'm going to make this a 50. I like to make this a solid line. I'm going to also, I personally like to see it green. That's just me. You can make it whatever color you want. And then I'm going to uncheck lower limit. I'm going to uncheck this thing right here. Okay. And inputs, I'm going to make this a 5. All right. All right. There we go. So now I've got 3 things that provide data for me that help me to find what we call confluence. In other words, when you have different confirmations and they all kind of line up together, you're looking for confluence. And the more confluence that you have, ideally, you're like, okay, the better that your setup should be. It's just more confidence, essentially. Does it mean 100%? No, nothing means 100%. But it's kind of like if you're at a stoplight and then the light turns green. If the light turns green, that's one confirmation that you can keep going. If you look both ways and there's no pedestrians, that might be a second thing that you can do to keep going. If you also look around your perimeter, you might see there's no other cars coming in the crossing direction, right? So those 3 things together may give you the confidence to step on the gas and go. Does it mean that a car won't come out of nowhere? It doesn't always mean that, right? Does it mean that a pedestrian won't come jumping out into the street? It doesn't mean that, but it means that if you have these things together, you have more confidence that when you step on the gas, the road is going to be clear. Okay. It's the same thing here, right? Anything can happen out the blue, but more often than not, what we're looking for is more confirmations and confluence. Okay. So these indicators help to give us some of that data, and I'll talk about how to use them in just a second. All right. Then inside of the price action, I'm going to add a couple of things in price action too. Okay. Let me kind of bring these down a little bit because they don't need to be so big. Oops. Hold on. Okay. In price action, I'm going to add a couple of things. I'm going to add moving average. Okay. I'm going to add 2 moving averages. I'm going to add it again, and I'm going to change the settings in it. And then I'm going to add the Bollinger Bands. Okay. All right. So it looks like it's a lot going on, but you have to trust. So I said once was blind, but now you see. You have to be able to train your eyes to see the data. Okay. So over here is kind of, there we are. You can see we got 2 MAs and we have Bollinger. Actually, it's not 2 MAs. It's 1 MA and then it's exponential moving average. Moving average exponential. Okay. That's the one we want. So we have an MA, a Bollinger Band, and an exponential moving average. So the moving average we're going to change. We want this to be a 4 MA. I like to make it dark green and a little bit bigger. Okay, that's my 4. Bollinger Bands are going to be fine the way that they are. And exponential moving average, we're going to change that to a 50. Now, do you have to do all these things? No, you don't. But I just like to see multiple things at the same time. Okay, I'm just sharing with you what's going on over here. Okay, you can make whatever color you want. I'm going to make it that color there. Okay, so now when I'm looking at price action, what I have is I have the top Bollinger Band right here. The red line is the middle Bollinger Band. This bottom blue line is the bottom Bollinger Band. This green line that you see through here that I made green is my 4 moving average. The 4 moving average is kind of serves as our trigger line. In other words, when price moves above and below that line, we know that's kind of where we're going to be pulling the trigger. In other words, getting into the trade. Okay, so that's kind of like a trigger line. And then this 50 EMA gives us the trend. Okay, the trend. So as you can see, this is, overall, this is a downward trend. You can see that, right? That 50 EMA helps us to see that. Okay, so those are the indicators that I'm applying to the harmonic scanner to help make a decision when it's time to make a decision whether I'm getting in or whether I'm getting out. Okay. Now, before I go any further, are there any questions about that? Let me look at the chat.
I just had a question as if this was being recorded. Because some people are at work.
It's in the MBA group. It's live in the MBA group.
Okay, awesome. Thanks.
Okay. All right. Are there any questions about what I've done so far? Because what I don't want to do is get deeper into this and then everybody's going back asking me about this. Okay. We're gonna, this is a building block. All right. So we're done with this when we're done with this. Okay. We have to keep
questions in the chat, Trace. No questions right now.
Perfect. Okay. Let me do this. Does everybody have it? Everybody have this?
Yes.
Okay.
Yes.
Yes.
Perfect.
Yes.
Okay.
Yes.
Now,
Yes.
okay, perfect. Thank you, guys. All right, so this is kind of like my basic setup. Okay, this is what I'm looking to do. I wish I could save this for whatever reason, but it won't, or it hasn't been lately. Okay, we'll see, but I'm going to try to name it that. All right, so here's what we're doing. So what we're working with now. With optimal entry, there's two. There's optimal entry and then there's OOE. OOE is optimized optimal entry, okay? So optimal entry has the 5 steps, and we're looking at these 2 shaded areas. Optimal entry says, hey, we want to make sure that the D candle is closed, right? We want to make sure that the Bollinger Band is wide. We also, as a subset, want to make sure that this D candle has pierced or broken through the entry point. Okay, which it has not at this point in time on this particular pair. It has not, but the D is closed. We've got Bollinger Band. Is this wide right here? No, it is not wide right here, but back here when the D first formed, it was, okay? And then down here in the 14 RSI, we're looking for the RSI to be below 30, the D, it's not. And we're looking for the stochastic to be below 30, which it is. We're also looking for the RSI to cross, make an X with the blue stochastic line pointing up because we're looking for a buy, which it did and it is. So we do not have all of our confirmations met for the optimal entry strategy. Okay, we do not have all the confirmations met for the optimal entry strategy. So what led us to OOE, optimized optimal entry, is that we were looking at opportunities where money could be made, even though this specific criteria was not met. This is a very, very high confirmation type of setup. Okay, so I still like it. We're not abandoning it, and we're not eliminating it. This is still a very, very high probability trade setup. Okay, what we're doing is what we're saying. Okay, if we don't see OE, if we like right now in this, we do not see a congruent, confluent, confirmed OE setup. Is there something else that we could tap into that would potentially allow us to catch some pips in the meantime? Thus, optimized optimal entry, OOE. Okay, OE and OOE. So what is OOE saying? Well, OOE is saying, all right, so we don't have this going on with the RSI 14 and the stochastic. Then let's look at our RSI 5. Okay, let's look at the RSI 5. We still want certain things to be in place. We still want the D candle to be closed. Okay, we still need that to be closed. But now we're not really looking at the RSI 14 and the stochastic too much anymore because they don't fit that anymore. So now we're going to turn our focus to the RSI 5. And now we're saying, okay, D candle is closed. Yes, it is. And you can see that we've got our 50 right here on this RSI. So the idea of OOE is that what we're going to do is we're going to wait until price after the D closes. If we're looking to buy, let me explain this. When you're looking to buy, we want price to be in bull territory. When price is above the 50, it's bull territory. When price is below the 50, it's bear territory. So do you want to buy technically if you're still in bear territory? Not really, right? Just kind of depends on your skill level. But ideally, we're looking for price to cross over from bear territory into bull territory, give us confirmation, and then we continue to move upward. Same thing coming down. We're looking for price to come from bull territory to bear territory, pull back a little bit, give us confirmation, and then keep going down. In other words, those of you that study what I teach in the MBA, you know that I talk heavily about break and retest of a zone, right? A break and retest of a zone. It's the same thing. So we're kind of looking here for RSI, right? A break and a retest of a zone, if you can find it, going up or down. Okay, that's essentially the same concept. If you keep that concept and not do away with it because you're focused on strategy, you got to be focused on strategy, but not let go of your concepts. All right, if you hold on to that, this will make sense for you. Okay, so we're looking for a break and potentially a retest, and then continue to move on. Okay, hold on, guys. Josiah, please turn that down. That's too loud. All right, so so in this case, now here, we can also see that the D point has not necessarily crossed this entry. Okay, now this is where you have to have what we call judgment. Okay, everybody say judgment. You don't have to unmute, but just say it. Say judgment. Okay, judgment comes from you seeing this over and over, you doing this over and over. It's called experience. Okay. If you have no experience, what you're looking for are exacts. And this at this point is somewhat of an art. I cannot give you an exact. Sometimes it is, sometimes it's not. You have to play the game. You got to play the game, okay, to see. All right. So what I found is that sometimes, sometimes the D will hit this entry and will go up, and sometimes it will not hit the entry and you can still go up. It depends on what? On the market. Okay. So if you're going to play the game, all we're really looking to do is find as many points of confirmation as we can before we enter. And if you don't have this particular point of confirmation, it doesn't mean it won't work. It just means you might need to, if you've ever played sports before, you hover around, the team comes together, you hover around the coach. The coach says, or the captain says, we're going to run this play. You go out on the court or the field or whatever, you run the play, and the defense comes with something that you didn't expect. When that happens, sometimes you need to call a timeout. When you call a timeout, what do? You come back to the huddle and you do what? You switch up the play. If you think that you're just going to run the same play the whole entire game and never have to adjust, you're nuts. That's not what we're doing. You might have to adjust in the middle. Okay, in life, you have to adjust in the middle. In driving your car, you can't just drive straight the whole way. Sometimes a car might be coming into your lane unexpectedly. And what do you have to do? You have to swerve out of the way. Was that part of your plan? No, but being vigilant, you better swerve out the way or else you might get hit. If you're only stuck on staying like this, then you run the risk of getting hit. And then you can't cry that you're hurt and all this when you had the option to actually move out of the way. I mean, yes, you could cry that you're hurt because they were out of line. But the point is, you want to do everything that you can in your ability to maintain your safety. Okay, your first priority should be you. So if you see a car coming into your lane, you move out the way as best you can. If you see something happen on the chart, then you make an adjustment. All right, I need to make sure everybody understands that. All right, so based on this, right, at the time of this particular trade, let's just say it had not hit the D point, but we're not doing OE now. It does not fit OE. So I'm flipping to double OE. Okay. So I see that at the D point, we're close to the 50. What I'm looking at is where the blue line crosses over the 50. And if you look at my crosshair, you can see that this vertical line where it intersects the blue RSI line, it's below the 50 still. It's below the 50. So since it's below the 50, I'm not going to get in. I'm not looking to get in until it goes above the 50, right? So we wait until the D closes anyway. What do we wait for? The next candle. When the next candle closed, where did it close? On the RSI, it closed above the 50, right? So that's confirmation number one. We're into the we're into the bull territory. Okay. Now, what am I also looking at? I'm also looking at this red RSI line. This red Bollinger Band line, because that still plays a role. Okay, just like it does in regular OE, this still plays a role. This line pretty much represents that this is an area where price could hit and then go the other way. Bollinger Bands help you to see things without you necessarily having support resistance lines on your chart. What we're going to do here today, once I get through with this little brief explanation, I'm going to still put support resistance on this chart, because ultimately that's what all this other stuff is doing, right? Bollinger Bands is what it's doing. Essentially, it's showing you support resistance without you drawing support resistance. All right. So if you understand that, then when I see this red line moving down and I see this blue candle moving up, I'm saying, uh-oh, warning, this is a support, or this is a resistance level. So I need to be careful right around here. All right. So when I'm looking at that, just because the candle closed above the 50, and just because the candle closed above my 4, which is my trigger line, right? I'm going to buy ideally when it gets above that 4. I've got to also pay attention to the fact I've got a red line blaring me in my face. So because that red line is blaring me in my face, I'm going to have caution lights. I'm going to have caution lights. And I see the red line, I probably would not enter that trade. Not in a buy, because where would I go? To where? The red line for a half a pip and then I'm out? Right? You can't be thinking about TP1 and TP2 when you have this red line right here. It's a resistance line. Okay? Does everybody understand what I'm saying?
Yeah.
Yes, ma'am.
Okay, so you have to be cognizant of the market conditions. Okay, so do we have it crossing? Yes, we do. Do we have it closed above the 50? Yes, we do. But when we have it closed, we have a resistance line in our face. So we're going to pause and we're going to wait. Okay, and then if we did that, then we would see that price hit this area, it turned around, it went back below the 4, simultaneously it went back below the 50, and now we're down here, right? So then what will we be looking for again? A setup. It needs to reset itself. We're looking for the setup to take place all over again. All over again, okay? We're looking for it to reset all over again. All bets are off now. We're resetting up all over again. So now here we are. We're down here. We're looking for price to close above the 50 RSI. When price gets close to this 50 right here, isn't that red line still in our way? Yes. So we're not going to do anything. What we need at this point is for price to cross and close above that level of resistance. So now, not only do we need price to close above the 50 so that we know we're in bull territory, we also needed to close above the 4. We also need to close above the 4 so that we have a trigger. Guys, please make sure you mute. Please make sure you mute it. Hello? Guys, please mute.
Trace, I'm not able to mute them for some reason.
Okay.
Probably that's the TV show.
Okay, maybe they got it together. Okay, hold on. All right. So we're waiting for several things at this point. You don't just get in a panic, in a frenzy, just because one thing was met. We need all these things to be met. So now when you have this red Bollinger Band line and you got this 4 MA line going sideways, you really need to wait. We're not going to play this game. Is it above? Is it below? Is it above? Is it below? It's consolidating is what it's doing. And if you're looking at the 50, you can see it's up below. It's above the 50. It's below the 50. It's above the 50. It's below the 50. It's telling you it's consolidating. So at this point, I wouldn't be touching you, Chef, at all. Okay. Does that make sense on what I'm saying with you, Chef?
Yes.
Okay.
Yes.
All right. So I'm looking at the scan. I go through this little process. I run this check through my head. I see this stuff. You, Chef, I'm not getting in. Right now, when it first came up, it might look like I could get in, right? I would wait until what? It crossed above the 50. When this candle came way up here, okay, no, now I need to stand down. Stand down, soldier. Okay. So what do? Next scan. Right? Next scan. What's up next? Let's see. Well, I can look at this right away. I mean, of course, we're further down the road now, but I can look at this right away and you can see that this thing is going sideways. Right? It's going at this point, it's going sideways. And what did I say? You got all these lines kind of hanging out together. Leave it alone. Look at the price action. It's not going up or down. It's consolidating. Look at the RSI. It's up, it's down, it's up, it's down. It's hanging around the 50. It's not above it. It's not below it. It's right around it. So we're not going to touch this either. Next scan. AUDJPY. Okay, so at the time AUDJPY, look what happened at the D. The entry point was pierced. We didn't hit the stop loss. That's good. Where were we at right here? Below the 50. Were we at OE? No, because this RSI is not below the 30. So let's convert over to double OE. We've got below the 50 here. Am I touching it? No. But above the 50 here, above the 4 here. But now we've got this 50 EMA and we've got this this middle Bollinger Band right here, right? That's a support, a resistance level. I'm not getting in on that right there. I don't care if this is above the 50. I don't care if it is above the 50. My other points of data is telling me to, hold on a second. And had you gotten in this, could you have possibly gotten TP2? Yeah, you could have, right? And, maybe that would have been good, but a little bit of a risk. In my opinion, a little bit of a risk. Because this didn't close that high above the 50. I mean, we're there, but not really, right? So for me, that one, I don't know. I probably would not have just because of this. Primarily because OE even says you get out at that line. You get out at that line because it's a support resistance level. So if I'm going to get out at that line, why would I get in at that line? You don't get in at the place that you're supposed to get out. You wait. Okay. So next scan. Let's see what we've got. NZD CAD. All right. So NZD CAD, look at this. We had this big drop. We formed a D. Awesome. It pierced the first entry, but not the second entry, right? Now, as far as OE is concerned, we met criteria on the RSI. We did not at the D point yet meet criteria on the stochastic because number one, it had not crossed yet. Is it below 30? Yes. But did it cross? No, it didn't cross. Hold on. Let me see if I can move this out of the way. It did not cross until, well, after this candle and before and right here. So in between there is where it crossed, right? So this is the point where potentially it could meet OE. However, OE says we need to have pierced both of these on a sharp, which we had not as of yet. But if we look at hindsight, this thing went all the way up, hit TP1, didn't quite make TP2 yet, but that's pips in there. So, all right, when this thing hit, it didn't hit this bottom. We were almost OE. I see that we were not OE at this point because we hadn't hit the second entry, but now I'm converting to double OE. So what am I doing? I'm waiting. Did it hit here? No. Here above the 50? No. Here, above the 50. No. Here, above the 50. But is it above the 4? Yes. Here, is it above the 50? Yes. It's above the 50, and I can see that I've got my red line is up there. But what I've been teaching is that when it's barely above the 50 like that, barely above, it usually has the propensity to turn around. So I need to see a stronger push up there. Just a little teensy weensy cross above is not enough confirmation for me. Why? Because I've gotten into them and it's done just what it just did. Get in right here at the close of this candle, which means you're at the top right here, TP1. You put in a buy and it immediately goes down to retest, which is a break and a retest. Keep that in mind, right? So you get in on a buy, it comes down to retest. And then do you finally make it? Yes, you do finally make it, okay? But here's what I'm saying. I'm saying, well, if you're patient, right, you don't have to get in and take any drawdown from this at all because it's barely above the 50. So here, I probably would not get in. Here, definitely not. Here, definitely not. Here, definitely not. Here, maybe not, because we're really at the same level, right? If I look at the horizontal axis, this is kind of the same level. Here, now we're a little bit higher. Does everybody see that? We're higher there. We're higher above the RSI on the 50, and we're actually higher on the price action too. So now I'm looking at the fact that I've got 2 candles above my trigger line. I've got 2 candles above my trigger line versus just, the one once it hit. So we had this candle here, like maybe I'll get in, I'm not really sure. This line, and then plus the red line is right there, right? The red line is right there. But here's what I'm looking at. I'm looking at a stronger push right here. And I'm looking at the fact that this candle had already penetrated this, this red line. Okay, already penetrated this red line. So I might have risked it. Some of you might not have risked that because now it's an art. I can't say what you should or should not do. I'm looking at a lot of different things. I'm also looking at my 50 up here, right? So I'm like, okay, we still got a downward trend. This thing has pierced this support resistance level. If anything, I'm gonna go to the 50 MA and get out, right? So here, what I would probably get in for a buy. Boom, we're here. We cross over the 50. We cross over the 4 MA. We also cross over and close above the middle Bollinger Band. And then here, we actually hit that 50 MA, EMA, and I probably would have got out right there. As you notice, I'm not looking at the TPs. I'm looking at support resistance, other support resistance levels. TPs are support resistance too, but in a second, I'm going to show you how these lines I'm lining up with depending on the time frame that you're looking at. Okay, this is a TP, but this might not be TP for a 15-minute. It might be TP for another time frame. Okay, so here, okay, there. Now, does everybody understand what I'm saying with that so far?
Yes.
Okay. Yes. Now, as a visual in my RSI, as a visual, what I like to do is draw a trend line in the 5 RSI, right? A trend line. So we've got this point here at the D. At this point, I did not have a second point to draw a trend line going up. How many points do you need in order to have a trend? 2. So we only have 1. Even if I look to my left, I don't have anything to my left that's below, right? I'm looking to go up, so I want an upward trend line, right? So if I look to my left, I don't have anything below for me to draw, so I only have 1 point. So I've got to wait, right? I've got to wait. So as price started doing this, and it went up here, and then it didn't go that high, and I waited, and it created this pullback. Didn't that give us now a second point?
Yes.
Okay. So I grab my ray, and I draw a trend line right there. I use the ray because it's a straight line and it's easy to do. Okay. I might make it a little bit bigger for the sake of this training so you guys can see it. Okay. Everybody see that trend line?
Yes. Yeah.
Okay. All right. So now what I'm saying is if I am going to get in on a buy at any point, I want to get in on a buy and I want to stay in my buy as long as this RSI line is on the upward movement above this trend line. When this thing closes below this line, that indicates that the structure has been broken. So I'm looking to stay above. So even if in your mind, you're like, well, how long do I stay in? You stay in until you have an indication that the price is about to reverse on you. How do I have this indication? This is what I'm sharing with you. Here's one way. You can put this trend line here, but you need 2 points. Don't make up points. You need a pullback in order to make a point. Do we have a pullback right here? Yes. If you don't have a pullback, then how can you have a trend? You don't. What you have is just a rally. Okay. Now, sometimes this price just goes straight up, 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 up. Yes, we've seen it all the time, but that's not a trend. Trending means price is going up, it's pulling back and it's retesting. It's going up, it's pulling back and retesting. It's going up, it's pulling back and retesting. That's what a trending market is. The fact that price is just going up, 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 up does not make it a trend. It just means it's rallying. For example, over here, look at this right here. Right? This little run right here, right? If you look at it, this is not necessarily a trending market.
Hurry up so we can go to the store.
Okay, thank you. This is not necessarily a trending market. This is just a run. This is a run. It's a run. You need a pullback so that you can have a second point. For example, if I were going to say this is a trending market, then I have a point right here. And then where's my other point? I don't really have another point until over here, right? I was here, I rallied up and I came back and I retested. And then I did not keep going up that much, right? I turned around and I came back down. This is a run, not a trend. I need to make sure everybody understands that, okay? Hold on, Saya, please get out the bread. Go sit down, please. I need you to go sit down. Lord have mercy. Okay. So this is how this happens, all right? You're looking for this up, down. You need 2 points. And then, okay, we're going to continue up, all right? So this right here, I would not have gotten in because it's just a little bit of teensy-weensy above. It came down, gave me a second point. Then I went up and I almost hit it again right here, right? So I may have gotten in right here. And then, you know, why would I have gotten out here? Well, one reason, because I can see that it would have hit my 50. Right? And here's a second thing that you can do to help you identify potentially where you might want to get out. So we drew a trend line with 2 points. We can also draw support resistance, right? So we're going to draw a resistance line in the RSI, right? So what I like to do to start the process, I like to find at least 2 points at the top. Right? This is kind of like the highest point. You guys can see. Oops, hold on. Horizontal line. All right. So we've got this right here. If you look to the left and to the right, you can see over here, we're touching this line. And over here, we're touching this line. Right? You might need to zoom out so you can see more of the line. Oops. So you can see more of the line, okay? So that's the highest point. You want to create another point, okay? Well, where else did price go to before it turned around? Well, if we look at it, we could see this was a good point. What am I looking at? I'm not looking over here because this didn't exist. I'm looking at this. I'm looking at this. I'm looking at this. I'm looking at this. I'm looking at this area. I'm looking at this area. Look how many times price came up to this RSI level before it turned around and went back down, right? So what happens is when I'm deciding that I'm going to get in a trade, I immediately come and I draw a trend line, and I immediately draw these, and an upward, moving upward into a buy, I draw these resistance levels. And so now if I'm looking, I'm saying, when do I get out? When do I get out? I get out. Look, how I'm going to get out, because I see it's at the 50 in price action, but I can also see it's dang near at this point. It didn't touch it, but it's dang near at this point in the RSI. When I see that happen and it closes right there, right? You guys can see that this candle closed right there. And I can see that I have touched that 50 and I almost touched that RSI resistance. I'm closing out of the trade in profit. I'm done. I'm not guessing. I'm not hoping. It's not emotional. I'm not praying. I'm not, oh my God, it's only 1 pip. I need 5 pips. You can't do all that. Either you're going to be the disciplined trader that follows the rules, or you're going to always be wondering why it's not working for you, because you should have gotten out. You got in fine. It's not entry. You got in at a good point. The issue is you didn't want to get out because you're greedy. Okay? Your greed made you tell yourself, oh, this has got to hit TP2. Look how close it is to TP2. It's got to hit it. You're ignoring your trend, your 50 telling you we've hit the trend. You're ignoring this red in the middle of the Bollinger Band. You're ignoring the trend in the RSI. You're ignoring the resistance that you put in the RSI, and you're going off of your feelings. Your feelings are not going to get you paid. Okay? This is what we're doing. Okay? Now, how many pips is that? Probably not a whole bunch. But you don't need a whole bunch all the time. What you've got to get good at doing is identifying the setup, getting in at the right time, getting out at the right time. You practice getting in, getting out, getting in, getting out, getting in, getting out at the right time. You start to lose sight of your emotional state about, I want TP2. I need 30 pips. I want to make $100 on a one trade, $2,000 on a one trade. No, you get the pips that are made available to you and you get out. So in this case, we probably would have got in right at the close of this candle, which would have been right there. And we would have went up and we would have got out right there. Hold on. And what do you know? 10 whopping pips. 10 pips from this little candle right here. Let me point it out to you. Maybe you understand. That candle to the top of that candle. So what do we have there? This candle closed. So we had 15 minutes, 30 minutes. Okay? Do you guys see that?
Yes.
Yep.
Yep. Yes.
You get the 10 pips and you get the heck on. Don't worry about what the TP is saying. Don't worry about what the TP is saying. Worry about what the market is telling you. Worry about that. Focus on the structure of the market. Okay? Now, I'm going to open it up for a second. I'm going to stop right there before I put the support resistance lines on, which is really what I wanted to show you in effort to kind of help you even tweak where to get in sometimes. Because what will happen is sometimes you might get in right here like you would have, right? And as you can see, price came, it went down a little bit, but not that much, right? This case, if you did market execution, you would have been okay. When this candle closed, you do market execution, you would have went right into profit for 30 minutes, you're out. Boom, 10 pips, said and done. It's not always like that. It's not always that easy. Sometimes you have to wait, and sometimes you need to assess what's going on. So I'm going to stop sharing for just a second, And I'm going to come back here so I can see you guys. And I'm going to open it up and see if we have any questions or anything like that. And then if we don't, what I'm going to do is I'm going to go back and I'm going to draw support resistance on the harmonic scanner. All right, guys? So let me hear your thoughts. What you got?
Great training. It helped me be clear and surgical with my actions. It gives me confirmation of what I need to do.
Good. Excellent to hear.
Yeah, Tracy, I feel the same way. The Bollinger Band, how you explain the resistance on the red line, and getting out basically where, not trying to gain so many pips. Like the one you just showed, basically if a person stayed in that trade, they would have been in a sideways move if they would have stayed in that. So awesome. Good.
And you guys are seeing that, right? Like you got to see this yourself. You got to see it. You can't get stuck on the route, like exactly this, and this. Like I said, when you're driving, you got to be flexible. You know what I'm saying? This is the ideal situation. The ideal situation is I get in my car, I drive this route, I hit all the green lights, and I'm exactly on time. That's what everybody wants. But you get down the road, it's an accident. What do you got to do? You got to detour. So if your whole rule in your life is like, oh my God, I can only go this direction and it's a detour, what are you going to do? You're going to sit right there and be mad at the city because you got a detour? You're going to sit there? Like, you're going to quit driving? Okay. And you're going to turn in your driver's license because you don't know how to adjust? No, you just have to follow the signs. And because you've been driving for a while, you're instinctive about certain things, but that came because you continue to drive. It didn't come because you sat down and kept reading about driving. It didn't come because you sat down and watched a ton of videos about driving. It happened because you would get in your car and you would drive. And you learned how to respond to the conditions of the road. The same thing here. Same thing. You're not going to get this watching video after video. Video gives you insight. You got to get out there and practice. Thus, demo account, right? So you get the hang of it, and then you can go. Anything else, guys? Tino says thumbs up. Okay. Let me look at this over here. Good stuff you guys are saying. Yep, be surgical. Sadia said, I'll take 10. I'll take 10. Yep, since it wicked, it more than likely actually touched the line before the candle. Exactly. Get out. Right? Get out, get out, get out. Okay, Gary says becoming clearer. Okay, good. All right. Let me come back. And let me make a couple more points really quickly. Okay. And then we'll keep moving. Guys, the scanner picks up retracements. In other words, let's go up. Let me go up. Okay, this is the 1 hour chart. Okay, now as you guys can see, our 50 EMA is giving us the trend. What kind of trend is this? Is it up or down?
Down.
It's down, right? So why are we buying? Because the scanner picks up retracements. So you're not going to buy forever, essentially. You're looking to buy up to a certain level, and then we expect the market to continue to go down, which is exactly why this 50 EMA is important. You looking at it, you can see that price, it came out a little bit, but overall it's respecting this 50, right? So we're going down. So we're only looking to go up until it's time to come down, right? I mean, Bob Proctor says you can do whatever you want to do until you don't want to anymore. Okay? Do what you want to do until you don't want to anymore. So we're going to buy because we want to buy until it's time to not buy anymore. And then we're done. Okay? So you got to understand the scanner's picking up retracements. It's shorter moves overall. Okay? If I were to go up here to the 4 hour chart, you will see it even stronger. Look at this, right? This thing was up, up, up. And what have we been doing? We've been curving down. Price has been doing what? We're curving over, We're curving over, and now our 50 is pointing us down. Our middle Bollinger Band is pointing us down. Our 4MA is pointing us down. We're going down overall. So if we're going to go down to the 15-minute, we're just scalping a little bit. You know, maybe a little intraday, depending on how fast the pair moves, but we're not going to be doing this forever. The overall trend is down. So that's why you're going to see bigger movements going down. That's why sometimes it might take a little bit longer for you to get your pips, because you're kind of going, it's weird to say, but you're actually going against the trend, right? The scanner is not the trend, is my friend, right? You're not going with the trend, you're going against the trend. So you can see, boom, big drop down, slower rise up, right? Bigger candles coming down. Now we consolidate and do what? We're accumulation. Getting more orders before we potentially do what? Before we potentially continue back down, right? Before we potentially go back down. All right, so that's that. Let's go to a new pair. What's this? NZD CAD. Let's go to Euro odd. Let's see what Euro odd did. Let's analyze Euro odd from the jump. Okay, now if you're not patient, then you will feel a need to rush, and that's not going to help you at all in this process. So here on Euro odd, let's look at our regular OE. Did we fit regular OE? No, we did not. The D candle. The D candle closed downward, and it hit TP1 and TP2 and almost TP3. Everybody see that, right? And so a lot of times you're like, oh man, we're done. It's over. The party is over. Pack up your grip and go home. Okay. And what we're able to do now is we're able to say, well, not so fast. Not so fast, Scotty. Not so fast, right? So we're going to analyze. We said, okay, well, listen, what's happening here? Prior to the D, where was price? Was price above the downward trend, or was price above? Oh, wait, hold on. Let's do this. Let's go back. Let me just identify the trend first. Oops. All right. So what direction are we going in now?
Up.
Up.
Yep.
Right? I mean, look, prior to, if you just go back, you can see, prior to, we were down, right? The 50 helps you to see it. If you can't see it with your, like, I can see it with the price action, but the 50 helps you to see it until you start training. It's like training wheels on a bike, you know? Okay, fine, use the 50. Down. A little bit of consolidation right here. We're still under the 50, and then we had what? Boom. Right? Kind of starting to push up a little bit, right? So what is the scanner doing? The scanner is saying, okay, we're going up, but we might have a nice pullback that you can capitalize on before we continue to go up. That's what the scanner is saying. So you got to keep that in mind. We're really going up, but we're going to go down for a little bit. So now I'm going to come back down to this 15-minute. I'm going to come back down to this 15-minute. And now I'm going to have a different perspective, right? Or I should have a better perspective of what I'm doing. I'm going to go down before I go back up. Okay? So now I see this D point right here. D point closes under TP2, under TP2. We have also closed under the 4MA. We had not closed below the 50, but we did touch our middle Bollinger Band. Okay, so now I'm coming down here. OE not in play. Let's convert over to double OE. So now, right when this D candle closed, where is that RSI? Is it above or below the 50? Class participation.
Below.
It's below. But it's, that's right, it's below, but it's kind of teensy-weensy. You see that? It's kind of teensy-weensy. For me, I don't know. right? I don't know if I would have gotten in that right at that moment, right? Why? Because I don't know if it's going to turn back around. We wicked this 50. I know we're in an upward trend, right? Don't we know that? So it wicks my 50. I know we're in an upward trend. It may wick it and turn around and keep going up. I'm not sure, especially since we already hit these first two take profits, right? So it's not enough of a below the 50 for me. It's still teensy weensy. So I probably would not have gotten in right there. And that's okay for me, right? So I would have waited. Now, if you had gotten in, great, right? It worked out in your favor. But I'm trying to train myself even more and you guys even more on waiting for confirmations, not trading with emotion and the fear of missing out. Your fear of missing out could have you get into this trade and then lose versus waiting on confirmation. So we want a stronger push below this 50, ideally. Okay, so great. I probably would have waited until that candle right there. Right? Now, could I have lost some pips right there? Yeah, a few pips, but I'm good. Like I would rather sacrifice a few pips than to be in a complete loss hitting the stop loss up there. Do you understand? Like, what's your risk? My risk is if I get in right there and it goes the opposite way, I can hit the stop loss. If I wait for further confirmation, I might not have gotten in, but I'm not losing anything either. No position is a position. Not being in the trade is a cash position. Warren Buffett has cash positions. In other words, there are certain stocks and things that he's not purchasing because he's sitting on cash waiting for price to drop before he buys. And if he doesn't have enough cash to buy, then he can't buy. But if he's missing, if he feels like he's missing on everything as it's dropping, then he will be losing his cash. He'll be risking his cash as it's going up. Cash is a position. Cash equals not being in a trade. It means you've got $100 in your trading account. You've got $2,000 in your trading account. To not be in this trade, you still got $2,000 in your trading account. That's a position. Don't worry about the $20 you could have made. Consider the 100 that you could have lost. So, confirmation, not enough, big enough into the bear territory for me. Boom. This candle hits. Why is it confirmation for me? Well, now we're more below the 50. I have crossed over the 50 and the RSI I've closed below, but my 50 EMA I have now crossed and closed, and my Bollinger Band middle line I have crossed and closed, and I'm deeper below my 4 MA. Do y'all see that? That's way more confirmation than this up here. You could get emotional and win. That's fine. But if you train yourself to trade like that, you're going to not win all the time. We don't win all the time anyway, but you're going to be training yourself to make decisions the wrong way versus wait for the green light. Okay. So here I got to close below. I'm going down. So I want to close below the 50. I want to close below the medium Bollinger Band. I want to close below the 4. And then I've got my closing below this 50 RSI. That's confirmation for me. So that would mean I would get in somewhere around here, right? Now let me put a line right here so you guys can see that. Right? That means I would get in probably right about there, right? Technically, if I did like a market execution, because this candle closed right there. If I hit market execution, I would have got in right here, right? I would have went up a little bit and then I would have came on down. Okay. All right. So now the thing is this, you would have market execute. You would have came in, you would have went up a little bit. You would have came down to here. Now there are no more TP3s and TP4s and TP5s. You got to be a trader. You got to figure out where you're going to get your self out. So now what you going to do? You're coming down here. Like, okay, well, where do I get out at? You know, how long do I stay in this thing? Well, remember what I said to you, right? So you got a D. Now, we don't really have a trend yet, right? Because we dropped off the cliff right here. We only got 1 point at this point in time. We only have 1 point at this point in time. We didn't really have somewhat of a little pullback until around here, right? We didn't really have anything until right around here. So what I would do, I mean, of course, you're in the trade at this point. You're already in. You got in over here. It wasn't until 30 minutes later that you got that point. When you get the point, you could draw the point. You're in the trade. You're managing your trades. You've got to manage your trades, right? Well, let's see. Hold on. My light right here. You got to manage your trade. So now you're in the middle of the intersection. You're there. What you gonna do? You gonna keep going, or you gonna turn around and go back the other way? Right? So, okay, great. How long am I gonna stay in this trade? Well, one thing you could do is you could stay in as long as this line has not closed above this trend line. You stay in. You can stay in and ride this line all you, as long as it don't close. Right? So that would have been, look at the price action. This candle, you staying in. This candle, you staying in. This candle, I probably would have got out because where did it close? Outside the line. Aren't you glad you did? Next candle, pull back. Okay, so that's one way you can, again, this is one way you can manage where to get out. Okay, remember what I said. Another way is put in your support from this standpoint on your RSI, right? So I'm looking for like the lowest points. I see something here, right? I got this area. I've got this area over here. All right. Then I'm going to also put in another area, which would be right around here. Right, so I can see right here we touched, right here, that top line, right here, almost right there, right here. These 3 areas, these 2 areas, this area, right? All of this happened before I even got in this trade. So now I'm in the trade. And right when this candle closed outside, you're damn near on that line anyway. Do you guys see that? Is it touching the line? No, but come on. Look, you're in profit right here. Don't be greedy. Get out. Get out. Does that make sense?
Yes.
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 Now, pippage. Let's calculate our pippage. Our pippage, we would have got in right about there. And we would have got out at the close of this candle. I mean, I'll take 21 pips. Actually, yeah, I'll take 21. That's what we got. Yeah, right here. I'll take 21 pips. Anybody else take 21 pips?
I'll take 21.
All day long. All day.
Right now, you can be greedy if you want. You can stay in, do all of this and all of this, just trying to whatever. Right now, you're losing pippage. You know, for what purpose? I don't know what purpose. You're just greedy. Get out the trade. Right? It went past your line. You shouldn't be in it anyway. Now, what I want to do, especially in a case like this, is I also want to show you the power of having your support resistance lines on your chart. Those of you that are MBA and Dream Team even too, you guys know that I heavily teach, especially MBA course, heavily teach on support resistance. Support resistance, break and retest, right? Okay, so let's do this. What we're going to do is we are going to draw support resistance on this chart. It's going to be a little busy. Your eyes are starting to understand all of this stuff. It's going to be a little busy. You can remove what you need to remove as you feel comfortable removing. But don't dare assume that because you've removed it, the data doesn't exist. Data does exist. The lines are there to help you remember that that data exists. So if it gets too busy, you might have to take some things off. Until you get used to it, you might want to just keep them on and learn how to read the language. Learn how to read the language, okay? So the first thing that we're going to do to draw our support and resistance is we're going to switch over to the line chart. You guys know Coach Wright teaches that, right? Line chart. Now, the price is in red and the 4MA is in blue, of course, and then the 50s in this brown and this other red. So I'm going to change the price line. Okay, I'm going to change the price action line because it's a little bit too hard to keep track of what's what. So I'm going to make price black. Okay, and I'm going to probably make it a little bit bigger. So now you can see price is black. Okay, everybody see that? And how I did that, all I did was double click on the line. I double clicked on the line and it popped up. You could do that with any line. You could double click on it or you can go up here if it's an indicator or whatever, but I just double clicked on the price line and it pulled it up. Okay. So here's what we're going to do. How many points do we need to have a support or resistance line?
2.
All of you guys that's not getting on Judy's training with the chart markup, hey, this is why this is important. You're not paying attention. You're not getting on the trainings. Okay, you can't complain. So what we're going to do, I'm going to look at where we are, right? I'm not going to try to mark up the whole doggone chart. I'm going to mark up kind of where we are, okay? So you got to kind of look behind and see and all this, but I'm just looking for black points to touch, right? So here, let me see if I put this here. Yes, why? Because this point touches here and it pretty much touches here. I believe it touches behind this 1.625 too, right? So I'm gonna put a black line right there. Okay, I'm gonna keep going. I'm gonna start from here. I'm gonna go down. I'm gonna look. Right here is a line right at the TP2. You guys can see support resistance level, right? Right here, we're touching this. Right here, we're touching this. Right here, we kind of came up above a little bit. Right here, we played around with it. You know, and I'm sure if you went back, look, we're dang near touching it right there. Okay. Grab another line. I'm going to start right here. I'm going to work my way down and see where I see 2 points touch. Here we go. Right here. I wish I could make it. I hope you guys can see it. Maybe I'll make can you guys see it or did I make the lines a little bit bigger for you?
Yes.
Oops. You can see? I'll make them bigger. Okay. So here we're touching here. 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 Good line. Let's keep going. Got another line. Okay. So we're going to go down. Oops. Didn't mean to put that there. Sorry, guys. Grab the line. I'm going to go down, down, down. And right here, I see something. I'm going to put a line right there. Why? Because I can see right here we're touching and right here we're touching. All right. I'm going to keep going. This is your 15-minute. These are your 15-minute support resistance. We're on a 15-minute chart. I'm going to keep going down. Right here, I see something. I got over here we're touching. Over here we're touching. And over here, we came down, we crossed up, right? It's kind of like a little break and retest of itself, but you can see a little bevel in the line right there, okay? I'm gonna keep going. Hold on. All right, so now I can see prices over here, but now we gotta look to our left because you can see that there's more activity in the left. Just because you have this big open space over here, you need to pay attention to what was happening during that space in the past. So now I'm focusing my eyes over to the left, right? So I'm looking right, but I'm looking left as well. So I can see a line right here. right? This is a point. Boom. Keep going. Do I see something right here? Right there. I got this area, and this area. Okay. I'm gonna keep going. I see this right here. This area. Boom. I'm touching right here. I'm touching right here. I went up. I'm playing around right here. Okay. You want to win your trade, you got to take time to see what the heck the market's doing. Stop guessing, hoping. You don't need signals. You are the signal. You are the signal. Everybody say, I am the signal.
I am the signal.
I am the signal.
I am the signal.
That's right.
I am the signal.
You are the dang on signal. Okay, so we're here, right? Y'all can see what I'm doing, right? Now we got some stuff going on here. Now, all this stuff wasn't here at the point of here, right? Us getting in the trade. Now, look, you get in the trade, each candle 15 minutes. You got time to do this. You understand what I'm saying? You got time to do this. Okay? This is your work. This is what you're doing. It's your work. Until you can start to train yourself to see it without having to necessarily do it. That wasn't there yet. Hold on, let me come this way. Because now what we're going to be asking ourselves is, when do we get out? Right? When do we get out? Right around in here. Okay, so I can see this point right here. 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 All right, I'm looking left. See, okay, if I get in this trade, when do I get out of this trade? Maybe right about there. So I'll say here. Why? Because here we're touching this line. Here we're touching this line. Here we went sideways and touched the line. Here we went down and we touched the line. How many lines do you draw? You draw as many lines as you think you need to find out where you need to get out at. Judgment. It's not 5 lines, 10 lines, 7 lines. You need enough. 4 lines. That doesn't exist. What exists is what you say exists. Okay, so we touch here, we touch here, right? Now I'm also looking at the pattern, right? I would have gotten in up here. I'm like, oh, that's enough lines, right? That's enough lines. Enough lines. How do I know it's enough lines? Because I'm getting in up here, right? I'm getting in right around here. So I'm looking, I'm way below the pattern. I'm way below this harmonic at this point. So that's got to be enough lines. That's kind of how you gauge it, not how many, or is it enough, or is it not enough? It's whatever you feel is enough to give you enough distance to feel like you got enough lines to see where price might reverse at. Okay. So you draw these lines on here. What we're going to do, come back to candles. It's magic. Magic. So now what happens? How does this adjust? Well, how does it adjust where you get in? Quite a few different ways. Let's go back to the entry. These lines are going to help us get in and get out. So remember, we didn't get in at the end of this candle. Why? Because it's teensy-weensy below the 50 RSI. But then this candle, this next red candle came down and closed below. It's like, okay, good. We could get in here, right? Now, could we market execute like I said before? Could we market execute and get in like we did? I'm going to make it red right there. Could we do that? Yes, we could do that. And what did price do? It went back up to this level, almost perfect, and then dropped down to where? This exact line. Do y'all see that? This exact support line, which happens to also mimic breaking outside of this trend line, which happens to also mimic the top of this red line that you drew on the RSI. Okay. Now it happens to match your support line. Do y'all see how this is all matching up?
Yes.
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 You want more confidence, then get more confirmations. So with this, you know, if I'm looking at this coming down, it depends, right? I could market execute right here, this candle and this candle, and none of these candles were formed yet. But I can also see that as this candle started to come down, and once this candle closed right here, what do I know about break and retest? What do you know about breaking and retest?
You set a pending order.
Why would you set a pending order, and where would you set a pending order?
Because once it breaks a level, it's your retest. So you set your pending order at the previous level that it broke.
Correct. Right? Now, in this case, we broke this level right here, right? This top level. And we broke this level right here. And we broke this level right here. So then the question is, well, which level do I put it at? Right? Which level do I put it at? Okay. Now, here's what I'm going to say that you have to kind of use judgment and gauge. Okay. So I got to look at all the data. Could you market execute if you don't fully understand all that yet? Yes, you can market execute. Will it pull you up a little bit? Yes, you got to be okay with that, especially if you're confident that this is a downward move. This is why I need this to be below this 50 like this, below this 50 MA, below this 4 MA, because I need all those confirmations before I even get in, okay? Because that gives me a lot more confidence that we're going to keep going down. So I could market execute and I would be okay. That's option one, okay? Option two is that you could look at the fact that this red Bollinger Band, remember I said the Bollinger Bands, that middle Bollinger Band plays a role in terms of support resistance. Remember we talked about that, right? So if you look left, and we'll go to other pairs to see how that looks, but if you look left, you could see that this red line was really kind of playing a role at this support level or resistance level. So for me, I would probably put a sell limit at this level because I see this red line right here. Worst case scenario, it goes up and touches this level right here. Okay, so that's what? 3 pips? If I put a sell limit right here and price still went up to retest this level, I would be -3 pips. I still feel confident though. You know why? Because I'm still below my 50. I'm still below this median Bollinger Band too. And I'm still below the 50 on the RSI. So I would feel comfortable putting it right there. And then even if it went up and retested this zone, then, you know, you're still okay. Here's the other thing I'm looking at. Like, you'll learn to see different things. Now that I have support resistance drawn in here, I can see a couple of things. Price came down, right? It stopped right here at this level. It went up and it came down, right? So we broke this level over here. Over here, price went up, it reacted, it came back down, and then it broke again. So we broke the level here, we broke the level here. When we came back down, we retested this level right here. We didn't just retest this level, it dropped down and it retested this level, and then we went back up. So now we're breaking this level again. So we broke it, we retested it, we broke it, and now what? Retesting it. This is a level of support resistance right here. I mean, there are levels of support resistance, but if I look left, look how important this particular line is. Do you guys see how important this particular line is?
Yes.
This particular line, not necessarily this particular line, some of them did wick up there, but price is not really getting above this line. Right here. Right here, we retested the line. we broke down, then we broke up, then we retested the line, then we finally broke down, we broke up, we retested the line, we broke down, and now we're retesting. So for me, when I'm looking at that, you know, you only got a few minutes. This candle is closing, right? This candle's moving. What's happening is you're getting nervous because you see this red candle doing this, and you're like, oh, I missed it, I missed it, I missed it. Tell you something. Break and retest is the best thing since sliced bread. Even if you miss, even if you caught this, even if you just like, I'm nervous, I'm scared, you jumped in it. You came in down here. You came in down here. What did it do? Pull up, went back up, retested, and it still came back down here. You didn't miss anything. It's your fear of missing it that causes you to lose. Your fear of it. But when you understand when the price breaks a level, it's going to retest the level. If you wait, then you don't have to be negative in this. Could you be negative in this? Yes. It's tons of times I might miss a level and I market execute and I go negative, but as long as I'm comfortable that I'm still going to go in my direction, I just have to eat that. I just have to see the red for a little while, you know, for what? 15 minutes, 30 minutes almost before we get back down to where I got in at, right? And then boom over here. But then I still come down. Like you know, it's not right or wrong or should I not? It's what do you understand? What makes the most sense for you? I'm trying to show you the different possibilities so that when it's time to be in the game, you can be flexible and you can adjust these are the different plays you could make in our playbook. These are different plays. One play is you can market execute. What's the downside to market execution? Well, you might go negative for a little bit before you come back into the positive. Okay, maybe you don't want to do that. Well, what's the next play? The next play is you wait for the break and the retest. The break and the retest means that you might forego this initial drop down and it might cause a little emotional fear of loss inside of you. But if you of that, you let that happen, you wait for the retest, you're up here, you're waiting patiently, it hits you, now you're not in drawdown, but you were afraid at the beginning. So either you're gonna get in and be afraid at the beginning, or you're gonna get in, you're gonna be afraid at the beginning. Okay, you gotta pick and choose what you're gonna do, right? All right, so retest, I put my sale limit here based on multiple different things. And this might be a more important level than here. Even if I put the level here, even if I put the sale limit here and it goes up here, what's the worst that could happen? I'm down 3 pips, not that big of a deal. I come back down here anyway, and then I push on down. And I'm positive from the time I hit, for the time I get pulled into the trade. I'm positive this whole time, no drawdown essentially. Okay, now I'm looking at this. So now I'm in the trade. Okay, everybody understand you can get in here or you can wait for up here and get in. Okay, you're definitely not getting in at all until you got this going on below the 50, regardless. All right, so those two options. Now that you're in, you're like, okay, where do I get out? Now, here's why I'm saying this to you. You could look to get out here. Because you could zone trade, you could trade zone to zone. What zone to zone? Line to line. Line to line. You can see price goes from this line to this line and reacts. Right? It comes down, it pulls back up. Then what does it do? This line to this line, it reacts. Then what does it do? This line to this line comes down, but it reacts. Then what does it do? Comes down, retests this line, comes down to this line, pulls down, touches this line, but reacts. So you can go zone to zone like that, meaning that you could say, okay, look, I'm going to also look at where price is on my RSI, right? So you might not set a take profit. You might not say, oh, I'm going to get out at 159,770. You might not say that right at the time. You might have to watch your trade for a minute. So you might say, okay, I get in right here. Now what do? I'm in this trade. All right. As long as this line don't close outside, I'm gonna stay in. As long as this line don't close outside, I'm gonna stay in. As long as this price doesn't close outside, I'm gonna stay in. Then you see it start moving out. So when you see it start moving outside the line, now you got to start being cognizant. Now I'm close to my red line and I'm close to this line. Anywhere in there that you choose to get out, get out. Some people might get out at this line. Some people might see this candle moving, and as the candle is moving, it's moving outside of this line. You might feel a type of way. You might get out in the middle of this candle moving. I'm not telling you exactly where to get out. What I'm saying is you got to be able to understand this is the parameter. When it moves outside of here and I'm close to this red line and I can see that if the candle is moving as this RSI is in action, it's also showing me that where the price is at this point, it's also moving right here at this point. Just you could get out there. So anywhere in there, get out. I don't know what your take profit is. It's wherever you decide to take your profit. If you get out at the line, right? In other words, this candle is full. This body is all the way. It's not a wick. It's all the way down here. The body is down here. If the okay. What's wrong? Okay. What did you do? Excuse me, guys. What did you do? You did what? Okay, do me a favor. Can you close the patio door? Because your hand is cold. Please close that door for mommy.
It is.
You closed it? You locked it? Okay. Okay. All right. Listen, let mommy kiss it.
It still hurts.
Okay. Well, let's do this. Let mommy finish her meeting. Can you go sit down and just be cool for a little minute, okay? Thank you. All right. So as this is moving, you can see that this candle is up, that body is thick, right? As it's down here, it's thick, it's thick, it's thick, it's thick. You might even think it's going to keep blowing through, but it's thick. But here's what I'm asking you to do. I'm asking you, as it gets close to this support, look at where it is down here. If it's close to your red line and it's moving outside and it's doing all this crazy stuff, get out at that line. Or not. Wait until it closes. You close. Okay, you don't get these few little pips. Who cares? You close right here. Get out there. In either case, if you let's put another red line right there. Let's just say we get out at the close of the candle. So then we would market. Let's say our play, you did market execution. You got out at the close of the candle because you waited until it closed outside the line. Okay. You waited until it closed. So we do some pippage, red line to red line, 22 pips. 22, hold on. 20 pips. Red line to red line is 20 pips. I'll take it. All right. You had a little drawdown, whatever. Let's say your play was you did your sell limit. Okay. If I did sell limit, then I came up here. I got in. Let's say you waited for it to close. You got you 27 pips. Hold on. You got you 27 pips in that case, if you wait for your sell limit and you get out at the close. Let's say that you get in at market execution, but then you wait until it touches this line down here, 23 pips. That's an option. Okay, let's say that you get in at the sell limit and then you get out when, hold on. You get in at the sell limit and then you stay in it until it just closes. You're just gonna wait for it to close. You're not gonna worry about that wick. You wait for it to close. 27 pips. Guys, I can't say. Some of y'all are gonna have 27 pips. Oops. Some of you gonna have 27 pips. Some of you gonna have 20 pips. Some of you gonna have 23 pips. You might have 27 pips. You might have anything in between there. I don't know what you're gonna have You have to be the captain of your own ship. I'm just trying to show you the plays that are available to you. Okay? Does everybody understand what I'm saying?
Yeah.
Yes, ma'am.
Yes, ma'am. Indeed.
All right. So let me stop sharing for just a second. All right. Is this showing itself to be clearer? Is it bringing any like, okay, I get it, I see. Is any of that happening? Any light bulbs going off?
Given multiple options.
Multiple options. That's why people are like, what's your take profit? What's your entry point? You know, all I can do is give you mine. You know what I'm saying? Somebody else might have a whole nother setup going on. I don't know. I don't know. Depends on where you get in. Depends on what you see. Depends on what you see. It depends on what you're comfortable with. It depends on your greed level. It depends on your ability to just see the parameters and get out. It depends on a lot of different things that through practice and experience, you'll get better. You're not going to get this in 7 days. Those of you that are new to the IML or our team or whatever, you're not going to get it by sitting back, hoping and waiting on the signals. You're going to get it when you decide to take ownership of the skill. That's when you're going to get it. You will lose money if you keep trying to make money off of your learning process if you're not comfortable, and then you're over leveraging. So you want to make $100 a day, you got $1,000 in your account, and you want to go ahead and you want to do standards. Okay, while you're learning, and then you make a wrong call, you get emotional, you close out, it goes in your same direction, you mad, and then you make the determination, this doesn't work. No, you should be in your demo account until you get the hang of the plays of your own on your own, or you can play in your live account. Like for me, what I do when I'm testing different things, I play in my live account, but I play at 0.01. I'm not looking to get, $10,000 when I'm testing different things. I want something if I win, but I got to be willing to not get something if I lose. So I do 0.01s on all of that stuff until I'm comfortable doing what I'm doing. Until I'm comfortable doing what I'm doing. So if I get 20 pips, okay, great. I'm happy with my $2. If I lose 20 pips, I'm okay losing the $2. I'm not going to put a real lot size on there while I'm testing what I'm doing. So you have that option. You can just be in your demo account until you get it and not touch your money at all. Or you can be in your real account, but why not just play it so low that you can't be emotional about how much you didn't make? You made what you made based on the lot size and your confidence level. When your confidence increases in the strategy, in the skill, in the play, then you can up your lot size because now you have started to hone your emotional beast that's inside of you that will try to take over your trades. It happens to me. It happens to everybody. It's not like there's anything wrong with you. That's what happens. I promise you that big red candle that went down, like if you didn't market execute, let's say I didn't market execute. And let's just say Keisha did market execute. So now we in the morning chat. This is what happens, right? This is why you kind of have to just chill in the chat. Don't worry about what people are saying. You got to look at what you're looking at, right? So I did not market execute. Let's just say Keisha did market execute. So now Keisha's in the trade. I'm not in the trade. Let me come back to this. Keisha's in the trade. Tracy is not in the trade. Right here, right? Or right here. Right? Or up here even. Right here, I did not market execute. Right? For me, I didn't like this. Keisha, for her, it was fine. So Keisha got in, she market execute. Now she running, we all looking at the chart and I'm seeing Keisha win. She winning. This candle closed all the way down here. Now I feel fear of loss. Damn. I should have got in when Keisha got in. You're avoiding all of the plays that are potential that are available to you. You worried about Keisha. So emotionally now you're going to make a decision to do something. when you shouldn't be doing that. If you didn't get in right here, what's your parameters? Tony Robbins said, now I am the voice. Okay, let me stop sharing for a second. It was he says, now I am the voice. The fear is not your voice. If Keisha's in the trade and the trade is moving and you feel fearful that you're losing something, that's not your voice. You got to step in there and you got to tell yourself, now I am the voice. That's right. Now I am the voice. You have your own set of rules. You say, okay, I didn't get in right there. It didn't fit my criteria. I'm going to wait until it closes down further. In this case, it closes down further. You market execute. When you market execute, now I am the voice. Or you don't market execute. You say, you know what? I see we broke this level. I'm going to put me a sell limit up here and I'm going to wait to get up here. And it does what? It comes up, it hits your sell limit. Now I am the voice. Don't let what Keisha's winning on or not winning on become your voice. And now you make rash decisions. You have fear of loss. You scared, you nervous. She's in the chat. I'm in the blue, right? And you like, oh my God, I'm not in. Cash is a position. Cash is a position. You can't lose if you ain't in. You can't win either, but winning and losing, you still got the same amount of money. Chris Terry say you gotta trade and see another day. In other words, have your money. Take that off your foot, please. You're eating out of that. Take that off your foot. Take that off of your foot, please. Thank you. Put it on the table. You trade and you see another day. In other words, you have your money in your account and you don't blow the account. You turn around, you have enough to keep trading the next day. You live to see another day. You live to see another day. Cash is a position. Not trading is a position. I got cash. I can do what I want to do when I get ready to do it. It's great if the whole team made 4,000 pips. I missed that. That's great. But guess what? I got cash. I can get on another 4,000 pips when I see the 4,000 pips. Now I am the voice. You have to understand these are not just affirmations. These are not just things people are saying to pump you up. It's in real life. When you feel that fear, that's not you. That's not you. You got to remind, why do I feel this fear? Now I am the voice. I am the voice. I'm in control again. I'm not you, fear. Fear don't control me. I control this. Now I am the voice. Now I am the voice. I defy the odds, right? I am a leader. I am a leader. I will lead and not follow. Keisha's in the trade. You're not in the trade. I will lead, not follow. I will lead, not follow. Not so that you can't study from Keisha, and following meaning that you can't follow her lead on certain things, but don't jump in the trade out of fear from following what somebody else is doing without your own confirmations and, consideration of what it is that you're doing when it's your money. Now I am the voice. I will lead and not follow. I defy the odds. He says, step up. Step up. Y'all with me?
Yes.
Oh, yes. Yes. Yes.
Okay. Listen to that. Listen. You got to listen to that, because when you get into these trades, you got to remind yourself who you are. You are the leader. You know the setup. You know what you're looking for. You know how to assess different things. If not, you can use the chat to ask the questions and this and that. And we try our best to help as best we can. But I am the voice. Now I am the voice. Why does it say now I am the voice? Because you're usually saying that when something else is already speaking. When you feel fear, fear is the voice that's already speaking. And you step in and says, now I am the voice. You letting that fear know, you don't run nothing over here. You don't run nothing over here. I got this. I will not be fearful of missing out. I will find the next best opportunity, and I will get in at the next best opportunity. I will not jump into trades in the middle of the move. I will find the next best opportunity, and then you have plenty of chances to do that. Keisha gets in up here. Good for Keisha. She's in. Great for Keisha. Now you can market execute here. You can sell limit here. Whatever. Don't worry about what somebody else is doing. Worry about what you need to do. Now I am the voice. I am a leader. Okay? Let's do one more and we'll be ready to rock and roll. Let me see. Let me take a look at this chat for a second. Y'all say loud and clear. Okay. Oh, stop loss. Good. I saw that in there. Okay. Stop loss. All right, good. I'm glad somebody said that. Okay, so here's the deal. Stop loss. If you're looking at this, okay, if you're looking at this, and let me be careful. I'm not saying don't have a stop loss. What I'm saying is that if you generally follow these rules, you won't really need to set a stop loss right away. That's what I'm saying. Okay, right away. However, you can always, structure tells us to set a stop loss at the previous high or the previous low. Okay, 3 to 5 pips above the previous high, the previous low. Now, technically, in that case, we're in the trade right here. Where's the previous high? This D point. So now you're down here getting in. Technically, your stop loss would be 3 to 5 pips above the D point. Technically. So let's see. This point is right here. It's 60233 plus 5 is 6028. 6028. So you could put a stop loss. You could put a stop loss at 60283. Technically, that would be your stop loss. Why? Because if price reversed and went above that, chances are we're going to keep going up. Okay? But look how far down we're, let me just say this. How many pips is that? Let's say you market execute at this red line. Okay? That's a 33 pip stop loss. You got to consider that. You want to do a standard lot and try to bank it all on one trade when you only got $200 in your account? Okay. Go ahead and lose $330 or get your account blown because you're trying to win the lottery on one trade. Okay? That's technically where stop loss goes. So for me, I'm not really putting in the stop loss when I'm getting in because we're getting in optimally. Optimally. That's the point of an optimal entry. We're getting in so optimally that most times people aren't losing because they're getting in at the wrong time. If you're losing, it's because you're not getting out at the right time. It's double OE. Optimized optimal entry. We're not talking about exit. We're talking about entry. So you're getting in at a decent time, right? So if you get in right here and it go the wrong direction, well, then that might not be such a bad thing with that stop loss up there. But you're getting in down here. This pullback not here yet. So, I mean, if you look back, you could look back and say, okay, well, what's a point that I could get back at? I don't know. Maybe one of these levels up here, right? You're getting in down here. You're like, okay, we got our 50. We got our middle Bollinger Band. I don't expect it to go up. You might say, okay, if price comes above this level, right, which is like this right here, you might say, okay, so what's this? TP1, basically. If price comes up to TP1, take me out, right? That might be an option. That was like another area of resistance. right? If it breaks that area of resistance, it could potentially keep going up because we're looking to keep going down. So we don't want it to break areas of resistance. We want it to break areas of support, which is what it's doing right here. We don't want to go up. So you could say, okay, if it breaks this area of resistance, take me out. If it go above TP1, take me out. You could do that. You know, if you get in up here at the sell limit level, which we said, you know, what I like to say is this: let yourself get about, I mean, if you're only going to get 10 pips, then you might want to just put your stop loss. It depends on what you want to lose, right? You could do 1-to-1, which is I'm willing to win 10 pips, but I'm also willing to lose 10 pips. So for example, let's look at this. Let's say we're in a short position, we're selling. So I'm gonna sell at this red line. You could put that there, right? You could say, okay, this is a risk to reward ratio of 1. I'm willing to lose the same number of pips that I am looking to gain. I'm willing to lose the exact same amount that I'm willing to gain. In this case, 26 pips. So, okay, if you put the thing here and you put your little thing right here, and then you look at your support resistance, you saying, okay, could I stay in until the bottom of this line right here? The green, could I stay in here? Where is that line? Well, it's right here at this red bear candle. Could you have stayed in there? Yeah, you could have. Hindsight now, right? You could have, right? But ideally, you're like, well, this line up here is a little bit more safe. I'm looking across, I'm looking left. I can see right here that price went up, it came down, it hit right here. So I probably would get out here. So maybe what I'll do is I will put my take profit here, or my ideal target right there, which would mean that now I'm at 24 pips. If I want to do a 1-to-1, I need to come down to 24 pips. So your stop loss would be right there. You understand what I'm saying? Your stop loss would be right there. Like, I'm only willing to lose the same amount that I'm willing to gain. That would need to be your playbook. That's why your trading plan is what it is. If you're rocking with us on the dream team and you're using the 10% situation, you need 30 pips a day. So your stop loss, it's saying that for the day should be no more than 25, 30 pips. So if you're in a trade where you're looking to only get 10 pips, you're not going to put your stop loss 30 pips for the one trade. If you're looking to get 10 pips for that one trade, then your stop loss might only be 10 pips for that one trade, because you might need 2 other trades to get you to your 30 pips if you're able to get all 10 in each of the other 2 trades. So you have to break up your stop loss just like you would be breaking up your pips gained, right? So, you know, all right, that might be your case. So in this case, I'm calculating and say, okay, I might get out here. That's 20 something pips. I'm only willing to lose 20 something pips. Put the stop loss right there. Okay, to start out. Now, once you get going and you're in the trade, and now you get 10 pips or so, depends. Let's say I get in. Oh, I'm already here. Hold on. Let me stop. Let me move that the way. So here's my thing. I get in at the take profit, and now I'm up 10 pips basically at this little past this black line right here, right? So this level right here, I'm 10 pips. So I might wait until this candle closes because I'm at 10 pips right here. So I might wait until this candle closes. Now I'm going to put my stop loss at break even plus a pip. I'm going to put stop loss at break even plus a pip. Why plus a pip? Because you have costs. You don't want to break even right at your entry point and then have to pay $1 for your cost. Now you just lost $1 for what? Because you didn't calculate to cover the dollar, right? So stop loss plus a pip, or and we're going down. Stop loss, cost minus a pip because you're going down, right? So you want to cover that. So you would come and you would put your stop loss at your entry point minus a pip. Now you're going to keep going down to your target, but if it reverses on you, you at least don't lose anything. You at least break even. You could just set it and forget it at that. If not, then as this thing now, okay, it moves to 20 pips, Now you might move your stop loss down to the 10 pip marker, right? You move your stop loss down to the 10 pip marker once it gets to 20 pips. If you're only looking for 25, 24 pips, then okay, you could just get out at that point or whatever. But you can do your trailing stop once you get enough pips that you're willing to, okay, if it goes backwards, I'm willing to at least take the 10. You could do that, or you can just keep your eye on it and trail it. Like it hits a certain zone. Like, okay, so if price hits this black zone right here, I might put stop loss at this black zone up here, right above this black zone. Okay, then price closes. It comes down to this zone right here. I might put my stop loss right above this black zone right here. You understand what I'm saying? You kind of just do it in levels, but you have to be cognizant of support resist of key levels, right? Like this is a key level right here, right? You can see this right here. You can see this right here. You can see this right here. So now if price comes down here and you put your stop loss right here, this is a key level. It might take you out. You know what I'm saying? So you might not want to put it right there. You might want to just, this is what I'm saying about you got to have intuition, right? You got to start assessing all these different things. But to keep it simple, risk to reward could be even. I'm looking to get 10 pips, then I'm only willing to risk 10 pips. I don't care where it is. Or you can say, I'm willing to do structure. I'm willing to lose 33 pips to gain 24 pips. That wouldn't make any sense because you always want your risk to be, you want your reward to be greater than your risk. If my reward is 23 pips, I don't want my risk to be 33 pips. I would want my risk to be 23 pips or less. I don't want to lose more than I gain. That's what a lot of traders do wrong, right? Including me at the beginning, to kind of start understanding this. This is why you can still lose trades, but still have a positive balance happening. Because even if you're losing, you're still losing less than when you're gaining. You're gaining more than you're losing. If you're losing more than you're gaining, your account's going negative, and then you're like, oh, I keep losing, it's not working. Okay, did that answer the question about your stop loss? Whoever asked me that? Hello? Okay, John, I answered your question. Okay, good. Okay, so there we go with that. All right, let's do one more pair and then we're out of here. Okay, we're gonna start from scratch. So what's this? That's Euro AUD. Let's do GJ. GJ, I made some money on GJ the other day. Anyways, this would be a good one. All right, we're gonna start from scratch. Okay, oh, hold on, I see a comment here. A chat. Joe, you can use them on all time frames. Yes. Okay. Yeah, because it's still going to be the same. Okay. But remember, on an hour chart, you're still waiting for everything to happen. It's just not going to happen for hours, right? Versus segments of 15 minutes. Okay. So let's do GJ. So in GJ, let's look. Let's see what we got. Regular optimal entry. Do we have it? No. Right? We didn't cross above the RSI. We didn't cross 80 on the RSI. We almost touched this second entry on the chart, but we didn't meet it just yet. Okay? So what are we going to do? Okay, let's just take a look. All right? I'm not drawing support resistance on every chart. I'm only drawing support resistance once I get in the trade and things like that. Or kind of just depends. Right? If I'm assessing it, like if it looks good. So for example, when this D was right here, okay, this candle, I'm getting close to the 50, right? Let's say this candle right here closed below the 4. I'm not below the 50 yet, but I'm close to it. I might say, all right, let me do this. Let me see what's up. Let me see what's up. Let me see what's up, right? Zip, zip, zip. I got 15 minutes before that next candle closed, don't I? All right, let's see what we got. Let's see what we got. This is what I'm doing. This is what I'm doing. I'm gonna make this black. All right, let me see. Where are my lines? Where are my lines? There we go. Got a level. What are we doing here? We got a level right there. Where are we going? Got me a level right there. I'm looking. What do I got? Got me a level. Okay, keep going. What do I see? What do I see? As quickly as I can, with as much precision as I can. I got a level. All right, all this not even here yet. So I'm just looking at all this over here, right? Okay, let me see, am I below the pattern yet? Not yet. Let's go a little bit more below this pattern. I'm looking left. I'm looking left. What I got? Might have a little pattern here. Probably more like there. Okay, great. Let's keep going. What do I have? Okay, right there. I got a level. Okay, great. So I might just do that, right? Real fast. Zip, 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 right? That was less than 15 minutes. Come back to my candles. All right, so now I can see my levels. I can see my levels, right? So this candle came down here. It closed. It didn't close below my 50 yet. So now what do? I wait, but I can see the levels. Now this candle closes below the 50. But I'm looking and I'm seeing that it's sitting right on the level. It's sitting right on the level, right? So I'm like, well, I don't know. Probably would. Let me see what's going on. Now, if I look left, this level right here, right? Price would hit this level and go up. Hit this level, go up. Hit this level, go up. It broke down, but it came down, it hit. This must be a key level. It broke up. This must be a test. Potentially. Could be a test. Right? So that's what I did. I waited. This was London session. Let me make sure this is set to the time frame so y'all can see what time this was. Because I did not get in this trade right then. Right? So this was at 6:30 in the morning. This candle, London session, I'm sitting up there looking at it, right? D candle happened, 6 o'clock a.m. Next candle happened. Nope. Next candle. Nope, not yet. Next candle. Nope, not yet. Next candle, it did close below. I'm looking at it, 7 o'clock. I got to get up. I got to take Josiah to school. I got to get him up like 7:30. So I'm like, do I get in this trade or do I not get in this trade? I'm like, well, this was like a level and I was willing to take the loss, or not the loss, but risk not getting in it. I'm like, well, I'm not going to get in right here because worst case scenario or best case scenario, I'm probably going to get out at this line anyway. So I'm not going to do all of that because I can see that this is an area where price will bounce up. So I'm going to let it do that first. I'm going to see if it does that. So I did not get in the trade. I let it go. I went on and did what I had to do. And I said, but I'm going to keep an eye on this when I come back. Soon as I got back home, I saw this was happening. Look, I get home about 8:50. Right? I get in the house sometimes about 9 o'clock, 8:50. Right? So I came in the house, zoomed in the house. I said, let me see where GJ was. And lo and behold, that thing had then went back up. Right? I said, oh, good. So now I said, let me reset up. Let me reset up. So now we're right at the 50. I'm not in yet. 9 o'clock, we close. Now we're deeper. We're a little bit deeper. This wasn't teensy weensy. This wasn't about it not being below the 50 enough. This was about it was below the 50, but it was sitting on a level. So I didn't want to get in right there. Now, could you have gotten in right there? Yes, you could have gotten in right there. And you would have went up and came back to the same level right here. I'm just waiting until it does that. Right? If it's going to come back down, it's going to come back down and go blow through. So, okay, boom, it goes up. Here, we got to close below the 50. Now, when it closed below the 50, we got to close below the 4 MA. We got to close below the middle Bollinger Band. We did not close at this time below the 50 EMA, right? But when we close, once we broke this level, I said, I'm going to put a sell limit right here. That's exactly what I waited. I put a sell limit right there. Okay. Now, mind you, by this point in time, I could also see that from the D point, we had a trend that was forming. At the time that I left, we didn't have the trend really, or we had a very steep trend. Like if anything, you would have had a very steep trend like this, right? You got those 2 points. They're very steep, right? And then the candle closed right here, and then it went over here. And what did it do? It broke out, right? So because this was right here, I'm like, I'm not gonna do that. I'm gonna let it wait. So once I came back home, this pullback had happened. So now I've got, this is the angle of my trend now. Right? So I'm like, all right, so what could this do? This could come up, it could hit several times, but I would still be under the 50 if it did that for the most part. I mean, it could come back up another time, but I'm thinking, well, if it hits this trend line, I'll still be kind of in business, right? So I came over here. This 9 o'clock candle closed at 9:15. It closed at 9:15. And then I said, okay, I'm not going to market execute. I'm going to do a sell limit at this level. Why? Because this was, I could see we had broke this level, right? So I came up here, I did a sell limit. Boom, got in right here. I get in right here. Once I get in, what do? I'm telling y'all my process, how I'm thinking about this. What do I do once I get in? Once I get in, now, here I go. Down here. I'm like this. All right, let's assess. Let's see, that's a low point. Let me see if we have another point that's that low. There we go. There's that second one. So that's valid. Let me give me another point. Maybe right around there. Yep, got me another point right around there. Right? So I do that. So I got me 2 points. We're up here. We're up here still. Oh, we're right down here. Right? We're down here. So I'm looking at this like, okay, I'm almost there. Wherever that is, because there's no price point on the RSI. It's just the strength, right? So I said, okay, fine. So great. I get in really at this candle right here because that's the pullback, right? Or the retest. And what do? I'm looking at this. I'm like, okay, great. We're going to keep going down. We're going to break this level here. I can see we got TP2, right? So I could get out at TP2. Right? In fact, I think that's what I did. I think I got out at TP2 on this one. I went from here to here. Why? Because I could see this was a level. TP2 is a level. And in this case, TP2 lined up with the level I drew. So I'm looking at the line I drew. It's TP. It came here. It bounced and went up. Right? It came here. It bounced and went up. It bounced and went up. We broke through a little bit. But we're really respecting it. We broke up, right? And I was like, well, I don't know. It could bounce and go up. So I just got out of TP2 and I was done with it, right? Now, it kept going, right? And I didn't pay no attention because then I got into another trade. I got into UJ. So I wasn't worried about it. But that's what I did. Like that same little process I just showed you guys. We're just doing it over and over and over again. So then if you look at how many pips it was from here just down to TP2, that was 21 pips. 21 pips, virtually no drawdown. Fast. This was like 15 minutes, 30 minutes, not even a whole 45 minutes because I got out as soon as it touched it. I didn't wait till it closed. I got out as soon as it touched it because I didn't know if it was going to pull up or what. Because see, we had just crossed this 50. So I'm like, well, I don't know if it's going to come around and try to retest this 50. I don't know what it's going to do. When it hit that line, look what it was also doing. It touched my red line. I got out. That's me. I got out. I didn't care about, oh man, it's a big body is moving. It's heavy. It's a fast moving train. And I could get TP3 and I'm done with the emotional shit. I'm sorry. I'm over it. This right here, it touched the line. I'm out. This line matched up with when it was at TP2. It was getting close. I could see it was the same line basically. I got out. 20 pips in the bag. Done. All of this, great. Whoever caught it, maybe if I had watched it and I saw like, okay, I could get it on a retest right here, would have got it on a retest right down here, right? And then it never did touch the line, right? But it probably would have got close. See, when it gets close to me, I'm getting out. Close or touching when it closes, right? So this closed right here. That's this candle. That's TP3. I'm out. If I would have got back in, I would have got right back out right there. I wouldn't have waited until this because this is too close to my red line, which also corresponds in price action as my TP3. What am I waiting for? Get the bag. Just get the bag and go. That's hypothetical what I would have done, but I got out at TP2. So from here to there, 21 pips, done. Because that's how fast this is. That's how fast this is. It's not even all that hard, right? You got to learn how to see the stuff. So you have these parameters on here to help you, but you got to know what you're looking for. I'm looking for a close below the 50. I'm looking for, if it's breaking below a level and we haven't retested the level, I'm looking for the retest point so I can do a sell limit. If I'm going up, I'm looking for a buy limit, right? Then I'm going to stay in until what? Until it either crosses this line right here, the trend line, or we hit my red line on the RSI. And especially if my red line corresponds to one of my levels that I've drawn, I'm getting out of the trade. This is optimal entry. We're getting in optimally. In this case, I might have put a stop loss hubby. I didn't put one in, but if I were, I probably would have put one right about here, right? Because this was the previous low. Oh, yeah, this is the previous low. So, the previous high. So I would have put in one right around here, right? If I just were going to put one in, but I didn't put one in. Just a minute, baby. I'm almost done, baby.
Yay.
All right. So I didn't put one in. We got to go anyway. All right. So I didn't. I saw this thing went straight into profit. Once it went straight into profit, we were almost down here. Hell, I moved the stop loss in front of this. Break even minus 1 pip. That way it don't matter if it turn around, news hit, anything happen. I'm good. I'm covering my costs. I'm not going to lose the trade. I'm not going to lose. I might not gain as much as I wanted, but I'm damn sure not going to lose. It got down here below this 50. I'm putting this dang on stop loss, break even minus 1. I'm in. I'm good. Now, once it come down and I see it blowing through here, doing what it's doing, it started reacting a little bit. I said, what's going on? Oh, shit, I'm sorry, y'all. This thing is right here. Oh, I'm out. Exit. Market closed. Done. I don't give a darn. Out. I don't care. It can drop all the way down through the computer, through the floor, all the way down to Australia. I don't care. I'm getting out right there. Okay? So I think that I've made my point. Okay? I think I've made my point with what I wanted you guys to know and understand. Okay? Now, this is why you want to be on the trading sessions with us in the mornings. I'm going to be honest. Sometimes I get on London session. Depends on how late I'm up at night. I try to get into bed, and sometimes I'm not able to make it. Okay? Don't not do what you got to do, because Tracy, now this is not about Tracy. This is about the team. I got shit to do just like everybody else got things to do. Don't you not get on because I got something to do, or because I fell asleep, or because it is. They'll be are we doing the training today? Y'all should be on every day, no matter what. I try my best to get on, but sometimes I'm not able to. But if that happens, I take him to school. I come right back. I jump on New York. I jump right on New York and see what I can find. But I promise you, stay on. There's a couple of members on the Dream Team that have access to my Zoom account. So even if I'm not on, you guys should be on. If I'm not on, sometimes it will say another meeting is in progress. It doesn't mean another meeting is in progress. It means that the admin has not logged in yet. It also means that. Okay. So if you guys see that, then that means either myself or the few people that have access to the Zoom account, they're not on yet. Okay. You might post in the group or something like that. Somebody going to be getting on at some point. Okay. But get on the Zooms and look for these setups like this. I promise you, you're going to be okay. And if you don't believe me, all we're doing is back testing right now. I just showed you what I did on a couple of my trades, or at least one of my trades, but you can see, use the weekend, go back, see what happened. Test it for yourself. Now, when we're in our live sessions, because our live sessions is not coaching. Those of you guys that have not traded with us, let me just explain this to you. Our live sessions are not coaching. We're not coaching you there. Don't get mad at me because I don't want to explain stuff to you. I'm not there to explain. I'm coaching right now. Don't get mad at me because I'm trying to make my money during the same time you're trying to make your money. I can't teach you and watch my trades at the same time. You guys understand that? Like, there's a point where I've got to do what I got to do too. You got to do what you got to do too. That when I'm up at 2 and 3 in the morning, I'm not coaching. I'm trading just like you are. We're all making a sacrifice to get up early or stay up late, depending on where you are. If you're West Coast, you're staying up late. Okay? So please understand the dynamic of the trading session. It's a trading session. We're not training. Now, do we help clarify different things? Or people ask, oh, did you get in over here? Did you get in? No, I'm not in. No, I'm not in. You know, that happens. I'm not saying that, but please don't get on the trading session. Can somebody explain to me where we get in at? No, we cannot. You will get I promise you, nobody will respond in that chat because nobody's trying to train at 2:30 in the morning. You need to study what we have prepared for you outside of the game time. You do not go into the Super Bowl asking your teammates, can somebody explain to me what this play is? No, you should have been at practice. You should have been with us all the other 15 games throughout the year. You should have been with us when we was in whatever we were doing. But now that we're in the game, you my teammate, I love you, but I ain't got time to be playing with you about what the play is. We got to win the game. And if you got to sit on the bench because you wasn't at rehearsal, I can't help that. I can't help that. That don't make me a bad teammate. It makes me a good teammate because we're respecting the time of everybody else who took the time to prepare and study the plays. So when we go in the game and we all wearing the same jersey, we can win. We're not going to lose because we feel sorry for you. I don't feel sorry for you. I don't. We're adults. I don't feel sorry for you. You must study. You must practice. Period. You want to make 7 figures? It takes work to make 7 figures. You want to make 8 figures? It takes a little bit more work and more leverage to do that. So I just want to make it crystal clear. I love you guys. But please don't ask me to teach you anything during those trading sessions. And please don't ask anybody else that's on the trading session at 2 a.m. to teach you. We're not doing that. We're trading. Comprende. Everybody comprende. All right. All right. So guys, feel free. Go ahead, unmute. Let me know what you thought. And then we'll go ahead and close out for today. And this is broadcasting live inside the MBA group, which means that it is recorded and it will be playing as a live over there. Okay. That's where you can see it. All right. So let me know what you guys think. And then we'll go ahead and close out.
Absolutely awesome, Tracy, as usual. Thank you.
You're welcome, Derek. You're welcome, brother. Dar says, thank you. You are welcome. You're so welcome. You're so welcome.
Awesome, Tracy. Awesome.
Is it helpful? Like, don't tell me it's awesome.
Yes.
And, you know, Tracy, it's awesome. Is it when you go to trade, are you going to be able to trade better now?
Oh, yeah, definitely.
Yep.
What you explain basically is utilizing the skills that we are learning in the MBA and inside of IML basics, basically, you know, support resistance, you know, just using those skills that we've already learned, basically, you know, for those who've been here a while, instead of just depending on the actual strategy itself. You know, you got the strategy, but you still can't throw away the actual skills you got the fundamentals that you got to know in order to be able to get in there and do what you need to do. So you broke it down very well as usual. I appreciate it.
Awesome. Yeah. Awesome. Thank you. Hey, Aunt, I see you got your hand raised. Go ahead, brother. Let me lower your hand. Did you want to speak? I can unmute you. Okay, no. I'll mute you back. Okay, let me go back to the chat. Joe says it's of cataclysmic proportions in a way of trading ideas at help. You too smart for me, Joe, down there in South Africa. You're just too smart. Okay? You're too smart for me, brother, but I appreciate it. All right, Keisha says, thank you, you're welcome. Made it clearer. Thank you, Josiah, being patient. Yes, he is. He is very patient. That's why I said, okay, I can't ask for much more. Okay, you see, he tried it for a minute, right? Now he's eating the lollipops. He's doing stuff he don't supposed to be doing because I'm trying to focus. All right. So listen, guys, review this as you need to. Check it out in the MBA group there. Everybody has the success formula. Everybody knows how to win at this point. I'm not teaching you nothing. I'm not telling you nothing. This is what's going on. It's going to happen for you as you practice. Okay. That's all it boils down to at this point. If you want to jump and do something else, and now you're looking at this strategy and that strategy, you're going to have to start that same process all over again. You got to learn how to stick and stay. When you invest your time, your energy, and your money in something, you got to learn how to pull out profits from that which you've already invested. We've invested a lot of time in learning this strategy and tweaking it and making it better, that for me to then all of a sudden, just because somebody else came up with something or somebody having this training, I'm personally not interested, not because what they're doing is not working or it's not helpful, is that I've already invested in what I'm doing. So my grass is going to be green over here. My grass going to be green because I'm mowing, I'm watering, I'm nurturing, I'm sunshining my grass. I am the voice. I am a leader. I defy the odds. I step up. You guys understand what I'm saying? I lead, not follow. Because of that, we're going to win. You jump around, you play, you get out. Like Joe said, he's in control. That's right. You get out of control. That's not you being the voice. That's somebody else. That's the voice. Your fear, your anxiety, your anxiousness, you just wanting to win without practicing. Like all of those things, those feelings are not what makes you a 9-figure earner like Mr. Christopher Terry or any of the multiple 7- and 8-figure earners that are part of our community that you know or may not know, because they might not reveal who they are. That's not what helps them make money in these great proportions. It's discipline. It's like a robot. If this, then that. If not this, then not that. No way to feel about it. It's either it's hitting this, it's either retesting the line or it ain't retesting the line. Simple. It's either going to touch this area of support or resistance or it's not going to touch it. If it touch it, get in or get out. Don't feel no type of way about it. Get in and get out at the level. That's what you do. Get in and get out at the level. I don't care if it's 5 pips. That's why I only caught 1 pip on you, Chef. Right? 1 pip. 1 pip. Because it did what it needed to do and it started acting crazy. And then I got out at the 1 pip. I didn't care. I'm not going to try to stay in the trade and hope it goes. 1 pip. UJ, the first time I got in, 4 pips. Then I waited for the setup. UJ again, 16 pips. You guys see what I'm saying? GJ, that same thing, 20 pips. So all I'm saying, guys, is study, practice. You got this. You got this. This is not that hard. Just practice the same thing over and over and over again. I'll see y'all on the session on Monday morning. Okay, Monday morning. For those of you that you're in the dream team, you already have access. For those of you inside MBA, you have to be a virtual trading summit owner to trade with us. I gave you the strategy that's in the group for everybody, but you cannot get the link to trade with us unless you upgrade. That's just the rule, and that's how we're doing it. Okay, I'm sharing with you what the strategy is, but if you want to interact with us, you must either be a Dream Team member, you already have the link inside of our platform, or you are an MBA member and you are upgraded to the Virtual Trading Summit. If you are upgraded to the Virtual Trading Summit, then you have access to the Optimal Entry tab inside of the MBA back office, and at the bottom of that, you have the link for the Zoom. It's already there for you. If you don't get access to that, it's because you're not upgraded. You cannot trade with us if you are not upgraded or a Dream Team member. That's it. Done in discussion. That's how we're rocking with that. Okay. That we keep the integrity of what we're doing in our group together. Okay. Monday, Joe, we trade London session. Joe, you are on the Dream Team, so it's going to be in the Dream Team stuff. Okay, it's gonna be in the Optimal Entry channel on the Discord. So check it in there. All the details are in there. Okay, you got that. All right, guys, I gotta run. Have a great afternoon. I love you. I appreciate you. Let's win. Let's have success. Let's dominate. Let's turn up. And I'm gonna before you go, I'm gonna actually close out. Oopsie, I was gonna try to play this. I'm gonna play this Tony Robbins one more time. All right, guys, hold on. And then we'll go ahead and close out Z broadcast.
Affirmations.
Thank you, Tracy.
You're welcome.
Something over and over again. Affirmations by themselves sometimes just lead to delusion. If you go, I'm happy, I'm happy, I'm happy, I'm happy, I'm happy, I'm happy. Your brain goes, bullshit, you're not happy. Because you're saying it verbally, but you're not embodying it with your whole body. What I want you to do is to try something. I want you to feel strong, feel your body. Repeat this phrase after me. Now I am the voice.
Now I am the voice.
Now I am the voice. I will lead, not follow. I will believe, not doubt. I will create, not destroy. I am a force for good. I am a leader. Defy the odds. Set a new standard. Step up. Step up. Step up. Use your whole body. Now I am the voice. Now I am the voice. I will lead, not follow. I will believe, not doubt. I will create, not destroy. I am a force for good. I am a leader. Defy the odds. Set a new standard. Step up. Step up. Step up. Think about what it means when you say, now I am the voice. Your real voice is never the voice of fear. Your real voice is never the voice of worry. Your real voice has strength and certainty within it. It knows the truth of who you are and what you're made for. Breathe like you breathe when you feel strong. And when you say, now I am the voice, that means you're no longer the voice of fear. It's no longer the voice of your past. It's who you are made to be. When you say, I will lead, not follow, that doesn't mean other people have to follow you. It just means you live life on your standards and that you'll never settle for less than you were made to be or do or create in your life. That you will not settle. How does it feel when you step up and you claim who you are? Make a sound of how that feels in your body, ladies and gentlemen. How does it feel to create, not destroy, to create love, to create joy, to know in your life you're a giver, not a taker, to know your life matters? How does it feel when you know you're here to lead? What does it feel like when you look at your fear, or you look at your laziness, or you look at your past, and instead of dealing with it, you defy it? How does it feel when you stand in defiance of anything that would stop you? How strong do you feel when you say, give me your best shot, and you push through it? How does it feel? What kind of pride do you have inside when you just step up and claim your true identity, when you raise that standard? Think about what that means. Here we go, nice and loud. Now I am the voice. Now I am the voice. I will lead, not follow. I will believe, not doubt. I will create, not destroy. I am a force for good. I am a leader. Defy the odds. Set a new standard. Step up. Step up. Step up.
Step up. You guys heard that? Bye. Adios. How was it? Was I listening?
You were listening. It was loud, but you was listening.
Yay. Now we can go to the